Hey, what's up everyone? How's everyone feeling today? This is Mark Perry back at you with another video. In today's video, we're going to talk about how to underwrite a deal, an apartment building, to where you can receive that cash on cash return for your investors. That's today's topic. We're going to dive right in. But before we dive right in, I want to announce that, I still have my book on Amazon, Shifting Your Mind from Poverty to Prosperity. Definitely go check it out. It's a small read, a small ebook, but it talks about how you shift your mind from a lack or a poverty consciousness into a prosperity consciousness. And you can put this into your business, into your success, or whatever you're looking to accomplish. So please go check out that book. So without further ado, let's get started. So now we're going to talk about real quickly of how to underwrite a deal once you get all the numbers in. So I got a deal the other day. It was at a 40-unit apartment building. It wasn't in the best location, but I got this deal, and I kind of want to go over a little bit for the projections of what I want to get for my investors. So if you're out there and you're raising capital and okay, well, my investors that I'm working with, I want to get them to get an 8% cash on cash. Okay, so how do I understand that? How do I know if I can get them an 8% cash on cash return? So let's go into this deal. But the first thing you want to do is you want to ask either the broker or the wholesaler, either or, the broker, wholesaler, whoever brings the deal to you, whoever brings the opportunity to you, the first things you want to get from them is a rent roll, and you want to get a T12, which means you want to get a trailing 12 of all the income and expenses in the last year. So those are the two key things that you want to get, and you want to get them updated. You want to make sure that they're updated. You want to make sure that they're a year long. You don't want to get them that's 2 or 3 years old, because that's not going to work. So you want to be able to get something that's updated. So the first thing you want to ask is for the rent roll and trailing 12. Now let's go into this deal. So when I got this deal, the purchase price was $2.5 million. It's a 40-unit apartment building, and they're asking $2.5 million for it. So that's roughly about $63,000 a door, around that area. So they wanted $2.5 million. The gross revenue was $336,000. Now I got these back from the broker. The gross revenue was $336,000. The expenses was roughly around 45% once I calculated the expenses. So keep in mind as well, when you're underwriting a deal, you want to make sure you're roughly around 45 or 50% in expenses. You want to kind of be around there. That's kind of the rule of thumb. And that's how the apartment investor building should be operating around that, because a lot of times with these older apartment buildings, if they're built in 1970s, if they're built in 1980s, a lot of times, they're older apartments. So a lot of times the expenses are going to be around 45, 50%. And plus, if it's kind of in the lower income area, which is roughly around $500 to $600 or $700, they're more going to be in a class C, but it's going to be more of a lower income area. So you want to keep that in mind. So the expenses was roughly around 45%. The NOI was $184,800. Now keep that in mind. The NOI was $184,800. Now let's go back over here. So let's say if you get that deal at $2.5 million, and the money you have to put down is 20% from the bank. If it's 90% occupied, you're gonna have to normally put about 20% down. The banks will request to put about 20% down. So 20% down of that $2.5 million is $500,000. And then you put 20% down. Now your loan amount will be $2 million, because if you take $500,000 away from that, you'll be at $2 million. So your loan amount will be $2 million. Now, typically what I've been seeing from lenders is roughly anywhere from a 4 to a 4.5% interest rate. Depends on, situation, circumstances, other assets, sometimes even credit score. But roughly you're going to be around 4% or 4.5%. And that's principal and interest. So let's say $2 million will be your loan amount. So let's say $2 million, and if you do 4.5% interest rate with debt and interest, you're looking at about $121,608 in debt service. So that's what you'll be looking at in debt service. Now, you take the debt service and you minus that from the $184,800, that leaves you a cash flow. This is what your bottom dollar will be. Cash flow will be $63,192 in cash flow. So that's your bottom dollar. Now you take that $500,000, right? So let's just say if you didn't have to put any renovations to it just yet. Let's say if it was kind of a turnkey property, you didn't have to put any renovations to the property. And let's say you put the $500,000 down and that comes from your investors. So your limited partners that's going to bring the down payment money, which will be 20%, they're $500,000. You want to be able to have an 8% cash on cash return or better on that money. So they put $500,000 down. You're at a cash flow of $63,192. If you take that, you divide that, if you take this number, divide this by this. So if you take 500,000 or if you take 63,192 divided by 500,000, that gives you a 12% COC, which meaning is cash on cash return. So now the question is it a good deal? Yes, it's a good deal. So if you're looking to get an 8% return, then you definitely want to go put that on a contract, because you're looking at, based on the numbers, the accurate numbers, you're looking at a 12% cash on cash return. So I hope that this video helps, but let's just kind of recap a little bit. So make sure when you underwrite the deal, make sure you have the rent rolls and you have the trailing 12. Make sure you have both of those. Now, if you can't get the trailing 12, at least kind of calculate it off the rent rolls, but you want to make sure that you have both. You want to see what the gross rents are, and then you want to minus your expenses, which roughly be 45 to 50%, and then that'll give you an NOI. And once you have your NOI, then you calculate your debt service, because you have to keep in mind you have to pay the bank back that loan. So you have your debt service, and then whatever's left over at the bottom of this, because people get this confused. They think the NOI is the determining factor, but that's not the case. Whatever is the bottom dollar on his debt service, whatever is cash flowing underneath that, that would determine if it's a good deal or not. If this is negative, then it's not a good deal. You can go back and renegotiate the price or go on a lower price. But if this is positive and you're trying to reach an 8% cash on cash, then yes, this is a good opportunity to where you can go and put this under contract, and you can go further into the underwriting and so forth as well. So you want to make sure when you have the debt service, you want to make sure the cash flow is cash flowing. And whatever down payment you get from your investors, which will be $500,000, you want to be able to divide that $63,192 divided by $500,000, and that will give you a cash on cash return, which this one is roughly 12%. Now, I know in today's market, you guys are probably thinking, well, Mark, where are you going to get a 12% cash on cash at? A lot of times these are not in the best areas, but if it's in a Class C area, you can still achieve those numbers if you get it at a good deal and if you find the right seller and someone that's motivated to sell. So the deals are still out there. You just got to search and find them. They are there, and believe that they are there. Believe that they are there. And the more you believe that, the more you will find them. So I hope this video helps. It's just a real quick cap of underwriting a deal, a 40-unit apartment building in about 10 minutes. So I hope you guys like the video. And if you haven't already, feel free to like and subscribe to my YouTube channel, where I'm going to be discussing more about how to underwrite deals and how to take those deals and put them deals together to where you can either raise capital or you can assign it over to make a $100,000 or $50,000 feed. So I hope that this video helps, and may you guys have a blessed day, and I'll talk to you soon. Thanks.